What's up, guys? Happy 2025. My name is Jesse Cohen. I'm here with my fellow Investing.comers, Tom Monteiro and Lon Juricic. We're here going over some of the top 10 stocks picked by ProPicks AI. Hopefully, we aim to deliver some fresh investment ideas, some names which are under the radar, not as mainstream as the others. Obviously, 2025 starting off with a bang, a little bit of extra volatility. And, what we're here for is, of course, unlock some new trading opportunities. Now, before we get started, just a show of hands in the comment section. We're curious where everybody is from, just to see how global our reach is here. Now, obviously, before we get started, just a quick rundown of what we had in 2024. It was a banner year for the S&P 500. We saw the benchmark index score its second straight year of gains, of an annual gain of more than 20%, of course, driven by the AI boom. In addition to indications that inflation is trending lower. But again, the story of 2024 was definitely AI, the Magnificent Seven tech stocks, and the NASDAQ 100, which of course covers all of the major tech names. Just a really solid performance for the tech-heavy index. What we expect for 2025 is, a continuation of of course, AI excitement. The question is, will the market react the same way? Or, are we kind of seeing the AI trade kind of run out of steam here? Tom, kick things over to you. What do you think, man? What's your outlook for 2025?
Yeah, so I think it's there's no argument that the market is overvalued right now. I mean, it's clear, and every time it has been this overvalued, the 10-year returns haven't been as good as in other periods. But so that's pretty clear. However, that doesn't imply that the short-term returns are not going to be good. And I think we're seeing earnings come out fantastic. I mean, it's both forward and trailing EPS are current at a record. If you look at a 12-month, the expected earnings growth rate for the S&P 500, we're projecting around 12% before this earnings season, but earnings have been coming out so nicely that we're actually revising this upwards, towards a bit more like 12.5, which is fantastic. So I think, the corporate profitability side is just showing tremendous potential. However, there are lots of risks and lots of volatility ahead, but I still trust the S&P will make another run at all-time highs just because of the way corporate profitability looks right now.
Nice. Yeah, I agree with on the run to all-time highs. The question is, do we get a correction in between? Lon, what's your outlook for 2025? Obviously, a lot of risks surrounding President Trump, the Fed rate outlook, inflation.
Yeah, I agree with Thomas. But for me, I look at not AI stocks anymore, AI efficiencies. So this means companies are using AI to cut their workforces, do more with less. What does that do? That boosts profits. And everyone, the PE, the E and PE earnings, that's what you look for. So as earnings grow, if we just maintain the multiple, which is 28 times right now, stocks are going higher. I see a pickup in M&A, but there is a key: interest rates, inflation. Once you start talking 5%, 6% interest rates, that you start worrying about stocks, because people have now an alternative to stocks. So you have to worry about that. But I do like the earnings power. Maybe we don't see 20% again like we have the last 2 years, but maybe 10%. And we just have to keep those interest rates in check. And I think we're good.
Yeah, a lot on the table for the year ahead. Obviously the wild card really is, what will Fed Chair Powell do? The pickup in inflation could potentially put rate hikes back on the table. And then, of course, you've got this confrontation with Donald Trump. Tariffs, are they coming? Are they not coming? In this type of market, it's stock picking, which, takes an extra importance. It's what matters, makes the difference between a year of outperforming and a year of underperforming the market. Stock picking really is playing a crucial role in 2025. We saw it at the end of 2024 as well. Like Lon mentioned, once interest rates started trending higher towards the 5% region, things do tend to get rocky in financial markets. So, the whole goal of what we aim to do in the next, hour or so is just provide some of these winners, names or potential winners, names which aren't exactly on your radar. And really one of the best ways to do that is with the help of Investing ProPicks AI, of course. We saw in 2024 vastly outperforming the market. We see here the outperformance, annualized returns for the S&P 500. There's a little bit here for everything, for every type of investor, whether you are a value investor or you prefer to invest in growth stocks. In Investing ProPicks AI, perhaps the track record speaks for itself. We'll delve into that into the product further on within this presentation, and kind of give you guys a little bit of a sneak peek into some new Investing Pro features, as well as a special gift, a token of our appreciation for all you folks who took the time out of your busy day to watch. So without further ado, Tom, Lon, I think we can jump into the list, the top 10 stocks for 2025 selected by ProPicks AI. So again, let's jump right into it. I'm sure some of these names will be a bit surprising, and Tom, Lon, of course, and myself will weigh in on where we see these names going. So number 10 on the Investing ProPicks AI stock list is Intel. A name which needs no introduction. The biggest semiconductor, one of the biggest semiconductor companies in the world, had a rocky 2024, coming off an annual loss of about 60% last year. But there's a lot to like with the company. EBITDA margins are high, 19.2%. Long-term earnings growth rate of 13.5%. And really, what to look forward in the year ahead. Will it potentially be a turnaround play? So, Tom, I'm going to throw this name over to you. What do you think?
Yeah, so that's a great name to kick things off with, first of all, just because, of all the discussion surrounding. I mean, Intel has been undervalued for 5 years now, and it simply hasn't ever materialized any type of gains. I mean, it's down 70% since 2021. Which is just, awful if you're an Intel investor. And the thing is, there are two ways to talk about Intel right now, by the way. You can talk about, in light of the merger chatters that have been going on, or you can talk about it, as a standalone company. I mean, I think the merger chatter, we can leave that for later. But, just to weigh in on that, I think that would be a fantastic solution for Intel. We would position it as, a leading player in the AI space if it did happen. But it's, that's something we don't know right now. So it's just a chatter right now in itself. However, talking about Intel as a standalone company, I mean, I think, it hasn't ever materialized the type of gains I would expect from it for one simple thing, competition. I mean, it's simply, the semiconductor industry historically is a highly condensated industry. So, it's really hard to have many names sort of competing at the same level, just because once you get ahead on this business, it's so much easier to keep building upon that leadership. And, just because you get, first of all, you get all the funding. Secondly, you get all the R&D. And third, you get all the talent. So, combining those three things, I just find it really hard for Intel to take any market share off of NVIDIA right now and over the next cycle, which, it's maybe at least a 10-year cycle, the way we're pricing things in. So even though I think Intel can still, deliver some gains and, just because it's so undervalued right now, and just because it's improved a little bit on the cost side, and so it's not burning through so much money as it had been before, although it still needs to burn a lot of money to come even close to Intel. It's never going to get there. I mean, so if you're looking, I mean, and I don't think many people get into the chip industry looking for small gains. I mean, I think people who usually buy chip stocks are looking for, NVIDIA type of gains. So, if you're that kind of person, you're better off just looking at the more niche AI players, which actually have quite a few down the list. However, if you're looking for maybe a 10% gainer with not a lot of downside to it, I mean, this could be a nice name though, just because, it, as I said, doesn't have a lot of downside potential. I mean, you got the AWS partnership, you got CHIPS Act, you got the whole tariff thing, which will, simply due to the risk will force companies to sort of near shore or come closer. So yeah, I think it still has a possibility to have a nice year, but I don't think people are going to go into the chip industry looking for a 10% gain anyway.
Interesting. The question is, is it that beaten down enough for, value investors to come kind of pile into the name now, coming off such a bad year last year?
Yeah, so yeah, I do think it is. I mean, I do think it is, and I think mostly above everything, we're looking at a volatile year for the market.
So yep, Intel, very interesting name. Lon, what are your thoughts?
Yeah, for me, this is a dog, but it's even worse than a dog. It's a dog with fleas, and that's not necessarily bad. I don't love the stock, but it could work. And Thomas mentioned on those takeover rumors. That is a potential play. I mean, something's happening. There's absolutely, the CEO was kicked out, the stock was kicked out of the Dow, replaced by NVIDIA, but the saving grace is they could spin off their products and foundry arm. Like, this is most likely going to happen. And there's a high hurdle for this. So it's very strange with the way the CHIP Act is structured. They have to retain like a 50 or 30% interest. So not a lot of players, but some private equity players can see this as an opportunity. So if these two units split off, again, this stock could work. Do I love it? No. But can the stock gain 25% on rumor and takeover? And once this deal potentially happens, yes. So you just keep your finger on the trigger. When it pops 25%, again, boom, you sell. So it could work. So AI, I think, is right in this way. Also, one analyst, there's mostly analysts hate the stock, but there's one analyst who talks about Intel having an iPhone moment. They're able to have these chips, like really super cheap chips, and they're able to bring out AI at like 99 cents. So he calls it the iPhone moment for Intel. Now, I don't know if that ever is going to work out, but again, it's another opportunity that if this momentum gets going and the stock ramps 25%, boom, that can make your year. So again, dog with fleas. I don't love the stock, but AI could be right. This stock could move.
Well, that's an interesting take you got there, Lon. Yeah, I mean, I agree for the most part. I'm actually upbeat on Intel's prospects for 2025. I think it's got a significant turnaround potential with AI initiatives, new management coming in, especially if some activist investor takes a position, starts rearranging the company, spinning off certain parts. So yeah, Intel down 60% last year. We'll see how it performs in 2025. On to number 9. The number 9 stock on the list comes from the semiconductor space as well. KLA Corporation, stock ticker KLAC, another leading provider of process control and yield management solutions. So another name coming out of the semiconductor space. It did score an annual gain of around 8% in 2024. So the AI models see a continuation of the positive trend. Taking at the look at some key numbers, impressive return on investment capital of almost 36%. It pays out a dividend as well, which has been growing by 14% over the past 5 years. So Lon, I'm going to throw this name over to you. What do you think about KLA Corporation?
Yeah, again, I'm agreeing here with the AI. I do like it. The stock's down 6% over the last 6 months, so I think it's going to be a reversion type of trade. The key here is China, and the company's already de-risked their China. So they cut their revenue outlook for next year, but for 2025 by $500 million. So they de-risked that. So a lot of these semi-cap stocks haven't de-risked that China exposure, but KLA is one that has. So they've already taken that hit. Again, stock's down 6% over the last 6 months, so it could revert. It's a stock that could move. They're a leader in the space. It's a safe haven in the semi-cap space for tough times as well. So again, a stock that could work. I do like it. They've taken their hit, and let's see if we can get some reward on it.
Interesting. Yeah, Tom, what do you think about KLA?
Yeah, I agree with the AI. I don't agree with Lon on this one. I think this is a great company. I think it's been, it hasn't delivered what it should, and it hasn't delivered the full potential. And it's a more niche player. So I think if you're looking for something with a bit more upside potential in the AI space, I would go for that instead of Intel. So I do think it's a better play right now, just because it's not competing against, anyone who's going to, take all the market share of it. And I do see lots of tailwinds, for the industry as a whole. So yeah, that's definitely a stock I would bet on for sure. I agree with the AI on this one.
Yeah. I think for the most part, I think KLA is positioned for strong growth in 2025. Like Lon mentioned, it's a leader in its space, a very dominant player, and it's got really strong secular drivers in 2025. A bunch of positive tailwinds such as 5G and automotive electronics, data center growth as well further underpins the bullish outlook, in my opinion. So I agree with the AI as well. I think KLA Corporation is a name which should be on your radar. Definitely add it to your watch list. And let's see how this name performs throughout the year. On to number 8, unless you guys have anything else to mention.
No, that's it.
Move on. Yeah.
All right. I know this is a name which is definitely under the radar for most investors. Number 8 on the top 10 list for 2025 is IDEX Corporation. Hails from the industrial sector. It's a specialty industrial machinery company. Market cap of about 16.2 billion. So not a large player, kind of a mid-cap name in the space. It's got a diverse portfolio of specialized industrial products. So it's got a bunch of specialty products, which only IDEX manufactures. It was down 3% in 2024. So a kind of flat performance for the most part. I'm going to throw this one over to you, Tom. What do you like or dislike in IDEX Corporation?
Yeah, so I do think there's a lot of potential to be unleashed for industrials as a whole. I mean, as an industry, just because on the one hand we're seeing economic resilience and we're expecting the economy to keep resilient throughout the year, and on the other hand, if you look at the tech stocks and all the growth stocks being so overvalued, I mean, it's clear that at some point investors are going to start moving towards more reliable, sort of stable players with actual growth and reliability to sort of counterbalance their portfolios. So I actually have been doing this, but I bought 3M instead of IDEX, which I think is also a good stock. I mean, it's kind of within the same line of thinking. It's a nice. So I do think IDEX is a good company. I mean, it's been sort of it's moving sideways. It's been moving sideways for what? 2-3 years now. I mean, it's not. I mean, as you said, it grew 3% last year, but that doesn't mean it didn't move. I mean, it just kept moving sideways. So I think there's also a lot of potential to be unleashed once it's able to break out of that consolidation, and so I think that earnings. Maybe not this season, but maybe next season could very well help that, just because of everything, how the industry is shaping up, and industrials as a whole, as a sector as a whole, is sort of shaping up. However, I do see it as a tailwind that the chemicals industry is not projected to grow a lot. I mean, we're just looking at a 3.54% growth for industrials during the year, which is not a lot. So it will have to take market share from other companies in the sector. However, when you look at the tariff thing, you look at everything that's going, in geopolitics. I mean, it might very well do that. And I would add, as a second tailwind, I would say the strong dollar might be a problem for it as well, just because it gets lots of revenues overseas, and I don't think we're looking at a sort of scenario in which the dollar is gonna be at a sweet spot for these types of companies. So I do think that the dollar will keep weighing on financial performance for this one. So if I have to agree or disagree with the AI, I would say, well, if you're looking to diversify your portfolio, that might be a nice name. But if you're looking to get actual growth, I wouldn't go there.
Interesting take on that. Yeah, I mean, for the most part, I think this name is more sensitive compared to the two that we mentioned so far, more sensitive to potential, geopolitical issues, Trump tariffs, a stronger dollar. Lon, what do you think?
Yeah, it's again, you're not going to get rich off owning the stock, for sure. But I do agree with AI. It's a solid player, and I think the stock could work more as a flight to quality. So if people start getting nervous, start selling some of those AI big winners, they could be starting moving the stock. I mean, you look at the pricing power of the company. So even if inflation goes up, I mean, these guys are a niche player in tons and tons of little fields like med tech, water tech. So they have some pricing power out there, and so if inflation goes up, they can raise their prices. That's pricing power, that could drive these margins, and they're already 25%. So this company's making money. They know how to make money, and they could be a flight to quality in that case. So again, you're not going to get rich off owning IDEX, but it could be a nice stable stock for you. So I can't agree with the AI on this one.
Interesting. I mean, I'm wondering what the AI really took into account here. Obviously, there's hundreds of long-term metrics, short-term metrics, which were taken into account. Me, myself, personally, I probably would not be investing in this name in 2025. I could be mistaken and it could be proven wrong over the course of the year, but I think there are probably better options out there. And on to number 7, one of my favorite stocks in the market. I have some fond memories from this name from back in the COVID days. Number 7, Fortinet, ticker name FTNT, hails from the software space. One of the leading names in cybersecurity. It's got a market cap of $71 billion, so not exactly cheap. I believe it was up over 50% in 2024, and the AI models see more gains ahead in 2025. Lon, what are your thoughts on this one?
Yeah, again, I'm going to agree with AI here. They're a big player in the security firewall, as you know, and there's a cycle that's expected to start this year. So they have 11 models that will reach end of service, and there's this massive firewall cycle that will be starting. So that's just a huge. So this stock's up 50%, like you talked about. That cycle could start. These models, they come out of service. That means people are buying more. The stock can keep going. So again, I think this stock does work. I think the AI is right.
Tom.
Yeah, sure. And so just a compliment. I mean, I would, Lon said when he was talking about how he expect the market to be this year, he was talking about how AI is going to make things cheaper. So this is actually one area in which AI is going to make things more expensive, right? Just because it's going to force companies to spend so much more on cybersecurity, just because the AI models will be so much better at hacking and everything. So this is a growing, thriving business. And I believe for the long term, this is a growth play. So I agree with the AI just because of the sector itself and because of how the company's positioned. However, I would say that, this is historically also a very volatile industry. So it's very easy to change hands. I mean, it's once the technology changes, I mean, it's very easy to see another company taking the leadership. But right now, as it stands, I would definitely buy it.
Absolutely agreed. I think, the expanding global security market, increased global security budgets and spending definitely bode well from one of the leading names in the space. Now let's move on to number 6. This name hails from the financial sector, one of the biggest asset managers in the country, LPL Financial. Ticker LPLA. Again, like I mentioned, one of the largest independent brokers in the United States. It's got impressive revenue growth rate of almost 20%. EBITDA margins are high. Outstanding return on investment capital. A lot to like in this name, Tom. Don't you agree?
So yeah, I completely agree. I think financials are arguably one of the better positioned industries in the current scenario, and there's lots of reasons for that. I mean, I would say there's a nice sweet spot for rates. They're not too high, not too low. So you can still get some good margins off of the lending business. You got deregulation under Trump going on. You got, a possible uptick in M&As, IPOs, and you got, lots of stock market tailwinds that would help propel the advisory proceeds, so as a whole. simple. I mean, LPL qualifies for 3 of those points. I mean, I mentioned 4. It doesn't qualify. It doesn't do M&As and IPOs specifically, but those are still tailwinds for the company just because of all, the proceeds they get to other brokers and to other companies that actually do. So, I think, looking at the stock and looking at the perspective, I think it's a great growth story. It's gone up some 50% last year, maybe a little less, but around
45%.
Between 45 and 50%. Yeah, exactly. But still, despite of that, it still holds a 15, around 15-ish PE, which is fantastic. If you see all the valuations within the S&P 500, I mean, it's just a fantastic combination of things of, macro, micro, everything's going on. So I think it's pretty aligned. And not just that, I mean, I would go as far as to look into other financial players as well, which are super undervalued. I mean, apart from the big 4, I mean, if you look at Wells Fargo, US Bank, PNC, I mean, there's so many names out there. And so I love this name.
Yeah. A lot of reasons to be bullish on LPL. A lot of reasons to be bullish on the financial sector in general, like you mentioned. Lon, you agree?
Yeah, I tried to hate it. I mean, that was my goal. I'm going to hate this name. The stock's down 32%. I will try to hate it, but I can't hate it. Again, the valuation, like, we talked about, 15, 17 times multiple, and that's like half what the S&P is trading at. So how do you hate a stock like that? Plus, if the market's strong, they're strong. They make fees. So as investors do well, these guys do well. So how do you hate that when they're earning money and they're cheap? So you can't hate it. I mean, like I said, I wanted to hate it, but I don't.
Yeah. I mean, a solid name. Got to go with the AI. Got to give credit to the AI model that picked that one out. A lot of other or better known names in the sector probably stand out more. So kind of putting this name on our radar, definitely a good look for 2025. On to the 5th name. We're moving on towards number 1. Number 5 on the list is Lockheed Martin. Another name which doesn't need too much of an introduction. The F-35 airplane maker, one of the biggest defense companies in the world. $114 billion market cap. The question is it justified? Let me throw this one over to Lon.
Yeah, I'm going to agree with the AI here. I don't think you can go wrong, but you got to benefit because Elon Musk and the Doge committee there has been killing the stock. So people are like, oh man, defense budgets are going to get killed. Elon's going to scrap this. You spend $10,000 for a bolt. Oh, we're going to cut out. So Lockheed Martin's going to get hit. So the market's already reacted. So you got blessed here by getting this one after the market sold it off. So do you think spending is going to stop? I mean, Trump said he's going to spend on defense. He's going to make us the strongest defense. You want to be in defensive names. Lockheed is one of the kings. You talked about the F-35, 27% of revenue. Even though there's some issues with that program, you still got years and years of that program still existing and making money for Lockheed. So I like it.
Yeah. A lot of reasons, of course. It's not like wars will end tomorrow. Donald Trump is still all about spending on the military. So yeah, Lockheed Martin. A lot of reasons to be bullish on this one. Tom, what do you think?
Yeah, I completely agree. It's if you look at it as a long-term play, I mean, there's no scenario in which the defense spending is gonna keep trending downwards. I mean, that's simply not going to happen. That's not only in the U.S. I mean, if you look at Europe, if you look the Middle East, it's simply even if you look at Asia, it's simply not going to happen because unfortunately we're looking at a decade of higher problems in that area. So it's how the world has been shaping up. So I think this is a great play. However, I would say that the downside right now is that, in the short term, I mean, we're seeing the ceasefire in Israel. We're seeing other things going on that sort of, indicate a more calm short-term perspective for defense spending, which obviously it's a good thing, but, it's we still think that's just temporary. I mean, defense spending is going to keep still, be on a rise. So it's not going to go down as we expected.
Yeah. I agree. I think it'll be interesting to see. Another wild card is Trump's stance with NATO. Where it stands on that. increased spending in Europe, in the U.S., in Asia, like you mentioned. So yeah, Lockheed looks to be a beneficiary of that one, despite some of the challenges that Elon Musk and the new Doge department poses. But yeah, it's a good opportunity to maybe get this name before things kind of break out in 2025. On to number four. The number four list, or the number four stock on the list, hails from the healthcare sector. I believe this is the first name from the healthcare sector to make it, and it appears at number four. And I'm talking about HCA Healthcare, ticker HCA, one of the biggest private hospital operators in the United States. There's an aging population, of course, increase in elective surgery performance, and the AI models picked HCA to outperform in 2025. It scored an 11% gain in 24. So, will we see greater returns in 2025? Lon, what do you think?
This is one I'm actually going to disagree with you. It's probably, like one of the few that I'm disagreeing here. The stock sold off 16% since the election, and I think it could probably sell off more. Again, you talk about, the Doge Committee, Elon Musk, Medicare. This one, I think Elon, maybe could have more power here. Hospital stocks and all that spending going on in the Medicare field, that's going to hurt them. And the utilization rates of the company haven't been great for this year. Now, I do see, like I said, stock sold off 16% since the election on all these fears that we talk about. So there's a potential for a relief rally in the stock. But again, I don't love the name. I don't love the industry right now. And I'm not going to fully agree with the AI here. But again, will the stock work? It could still work because, again, you got sell-off already. You get potentially a relief rally in the stock. But again, with the Doge Committee going on, spending cuts, I'm not loving it.
Yeah, I will say that analysts are bullish on this name, and they're anticipating growth of about 30% in the stock. Tom, what's your take on this one?
Well, so yeah, I would agree with Lon actually on this one. Even though I would add that, the whole Luigi thing, it's sort of been weighing on the industry a little more than it should. So, part of the reason why it's so cheap right now and has been falling is because of everything, the public reaction to what happened, which was kind of took an interesting turn right there. But, so I do think there's some gain to be ground, buying right now just because of, a sort of counter trend rally. But I agree with Lon on the longer term. I don't love the industry right now. I don't think the American public loves the industry right now. And I think that's a big problem if you look at the long run. So I think changes are going to be made if you look at the healthcare industry. And it's not a good moment to be caught up in the middle of the cycle. So.
Yeah, the sector itself, kind of took a hit with, I think, was RFK Jr. as potential health secretary in the U.S. It'll be interesting to see where things go with that one. HCA Healthcare could offer some upside in the year ahead. I just think there's better places to utilize your capital. That brings me to number 3 on the list. JB Hunt Transport, ticker JBHT, hails from the industrial sector, transportation and logistics, one of the biggest names in that space. EBITDA margins, double digits, dividend growth rate of about 12% over the last 5 years. And it's a strong buy consensus among analysts despite industry headwinds. Tom, what's your take on this one?
Yeah, so I think this is a huge Trump play, mainly because the stock has been on a massive downtrend under Biden and the whole sector, as a matter of fact, just because of all the environmental oversight that has been, preying on the industry's margins. If you look at the industry was actually calculating like almost $1 trillion of extra expenses just on greening and electrification efforts, under Biden to meet the standards that they were imposing. And this has been, part of it will be most likely removed. So, if you take out that weight from the one side, margins will start to improve tremendously on the other side. And I think that's great for the industry and unleashes a lot of potential because, and then if you look at the PEs of the industry, they have been, sort of really extended just because they're not getting any revenues. But the reason why they haven't been getting all the revenues is because of all the problems imposed and all the tariffs and issues imposed on top of it. So I would say that, looking at financially, I think this is a nice Trump play and it makes sense right now. However, I would say that the tariffs things is still the jury's still out on that one. I mean, if you look on the one side, the tariffs against Asia, yeah, that's pretty good for the stock. If you look on the other side, tariffs against Mexico and Canada, that's not so good. So I would not buy the stock just for the sheer reason that we don't know. It's too unpredictable what's going to happen on that end. So, I'm not looking to take any unpredictable bets right now. I mean, the market is too overvalued for that.
Yeah. I mean, a lot of uncertainty surrounding this name, mostly due to Trump and, the trade policies, which we'll find out soon enough. Lon, what's your take on JBHT?
Yeah, this company just reported earnings and they were pretty bad. Guidance saw earnings so the stock's been down 17% over the last year, but they are the best in class player. And when you talk about Trump, yes, okay, so think about it as a trucking company. Their biggest input costs are twofold, right? They have oil, the gas, right? Drill. What is that going to do to gas prices? Down, right? So potentially, that could help earnings, right? Next, autonomous driving. Now I don't think we're there yet. But Trump is already, Elon's in Trump's back pocket. He's talking to him all the time about autonomous. So what about autonomous trucking? You've seen those Tesla semi-trucks. What if we get a fleet at JB Hunt of Tesla semi-trucks? Where's the cost? And where's the margins? They're just gonna explode. So I don't love the stock just looking at it right now, but if I see lower gas and you tell me autonomous is gonna happen this year, then I say buy. That's how I agree.
Nice. Yeah, it's a good take, actually. I didn't think of that. Obviously, a lot of uncertainty, a lot of unpredictable developments surrounding this name. Definitely keep it on your radar. Take a look at it. Monitor the performance, and see. Let's see where that one goes in the months ahead. On to number two. I'm getting excited as we get down to number one. For that number two stock on the list for 2025, Applied Materials, ticker AMAT. Tech, another semi player, which was featured on the list, one of the world's largest semiconductor manufacturing equipment suppliers, market cap of $145 billion. So it's a major player in the industry. And despite that, it's got an attractive PE ratio of 21.4%, strong buy rating amongst analysts. It was up 1% in 2024. So the stock, for the most part, didn't really go anywhere in last year. What's your take for the year ahead, Lon?
Yeah, I'm agreeing with AI on this one. They're super strong semi-cap player. And if you look at, you talk about they're flat for the year, but they were up early part of the year. And then starting in July, the stock's off 27%. So there was this massive sell-off later in the year on the stock. Because, again, you're worried about China, you're worried about every other industry except for one, AI. That's the industry, and these guys can do good in AI. They are doing good in AI. So their AI segment is doing wonderful. Their enterprise, wonderful. Everything else sucks right now. But I think, investors could position themselves, again, you get a gift, it's down 27%, reversion trade, they're giving it to you on sale. It's a good stock. It could recover well. It's an AI play. I say buy it.
Yep. Industry leader in the semiconductor equipment market. AI, like you mentioned, 5G technology. A lot of reasons to like this one. Tom?
Yeah, I got to agree with Lon on this one. I mean, it's a great play. I mean, it's a gift right now. It's a perfect place to buy the stock right now. If you look at, where it had been last year, all throughout last year, this is much better right now if you get on it right now, even though the market is more expensive. So I do think this is a great play. And by the way, it's been on ProPicks list, several times throughout the year last year, and except for the last month of the year when it actually sold off. So I do think it's looking strong again. I do think it's looking much better, in terms of a price perspective. So I got to agree with the AI and with Lon on this one. I think it's a nice play, and I would definitely buy it.
Yep. That's a unanimous buy from all three of us. I think AMAT is poised for a strong 2025. A lot of bullish drivers surrounding this one. And yeah, overall, very optimistic about it. So without further ado, about to reveal the number one pick for 2025. Definitely a surprise, at least for me, it was a surprise. Monolithic Power Systems, ticker MPWR, semiconductor player, so that another semiconductor company featured on the list. Designs and manufactures power electronic solutions. It's got a market cap of $30 billion, so still fairly valued. And it pays out a dividend as well, which has been growing by 27% over the last 5 years. So, yeah, very interesting name to feature as the number one AI picked stock for 2025. Tom, I'm curious, you agree with this one?
Oh yeah, for sure. I mean, this is the perfect example of a great niche AI player that I was talking about when I mentioned Intel. I mean, this is not competing against anyone. This is just surfing the wave, and it's part of Intel chips. It's a key part of the Blackwell GPUs, which is a central part of the AI revolution. It's got another nice tailwind, which is the automotive industry. I mean, it's a key component of automotives, and this is also an industry that's supposed to do really well under Trump due to everything that we're talking about, solid GDP, deregulation, and everything. I mean, it's not by accident that it's been named by Oppenheimer a top semiconductor pick for 2025. It's got everything going for it. I mean, I do love it, and it's also 50% shy from all-time high, so it's been on a nice downtrend. So it's a nice time to catch the stock. And if you look at the AI industry as a whole, I mean, we're expecting a KIGR of around 35% into the next decade, and we've only seen a sort of revenue growth for monolithic has been around 20-25% over the last few years. So there's still a lot of catching up to do. I mean, there's still a lot of room to grow as it becomes a more central player. I mean, it's already a pretty central player, but it can become even more central as it starts generating a bit more revenues. It starts getting more intertwined into the whole AI production thing. So I love it, but the one thing I would say is that I would treat it as a long-term investment, just because it's a highly volatile stock. Obviously, there's competition, there's tailwinds. So what I wouldn't do with it is I wouldn't be looking at to get returns in a month. I mean, but then again, it's a volatile stock, it's a challenging stock. So do you have the mindset to hold it like for 5 years, through all the ups and downs? So that's the question you got to ask yourself if you're buying that name. I mean, do you want to take the risk? Do you have the mindset to hold it through the ups and downs? I mean, when it falls 30%, are you going to hold it? Are you going to buy a little more? So that's a question you got to ask yourself. I mean, otherwise, I think, looking at the long run, it's a great name, but it's sort of counterintuitive just because it's a better name, at least in my perspective, for the longer than for the short run.
Interesting take on that one. Lon, what do you think?
Yeah, again, I agree with the AI here. I do like it. There's one caveat here, and that is the stock's down 29% over the last 3 months. And there's one major reason. Their major client, like you mentioned, NVIDIA, they're coming up with this Blackwell system. Well, Monolithic's kind of been pushed out of that system a little bit. So they're trying to get back in, my understanding, but the way that they designed their servers is Monolithic provides these energy chips, the power chips to power up all this AI, these graphic networks, the GPUs. And they're kind of, with the Blackwell system, which is going to be the next big one, they're getting out of that system. So that's a problem. But again, they're also in Amazon, AMD, Google. So it's not just relying on NVIDIA. And everybody else is trying to catch up with NVIDIA. So as everyone else designs their chips, their servers, Monolithic Power is such a dominant player in that space. So I think, again, you have to look beyond the NVIDIA headwinds here and look longer term. So I like it longer term. And if you look at the stock, you get that sell out. The stock's trading right now 26 times on 2026 earnings. In average, they're usually trading 38 to 43 times. So the stock's trading at a severe discount to what it's usually trading. And that's all because of this NVIDIA hubbub. And again, they are a client. NVIDIA is a client. They're probably going to get back into the Blackwell system. So you get that sell off based on that intel that came out. Yeah, I do like it. So I think it's a great play, something to position in, and it's something, to ride the AI wave.
Yeah, very compelling pick, for the year ahead. Like we mentioned, all these sexy industries for 2025. Monolithic kind of has a foot in each of them, whether it be automotive, 5G, AI, data centers. I think this pick for the most part, just kind of epitomizes what ProPicks AI is all about. And that's kind of providing these trade ideas, these new investment potential opportunities, which might not have been on our radar, in the first place. So in terms of that, very interesting list, heavy on semis. I guess the AI models know more than us, or we'll find out towards the end of the year. Now, of course, just a surprise, which I mentioned earlier at the start. And we took this AI-driven list and combined it with a survey amongst our incredible global community. These are the top 5 stocks for 2025 based on you, our Investing.com reader. So number 5 to make the list is Ulta Beauty. Ulta Beauty, one of the largest cosmetic retailers in the U.S. I will just mention that it was picked by ProPicks AI a couple of weeks before Warren Buffett himself made an announcement that he purchased the stock. So Ulta Beauty, number 5 on the list, one of Warren Buffett's favorites. On to number 4, Applied Materials, which we mentioned before. Number 3, Intel. Number 2, Lockheed Martin. And the number one stock, according to you, the Investing.com readers, was Microchip. So a couple of names there which were not mentioned on the top 10 AI-driven stock list. And I thought it would be a good opportunity to show you guys a brand new feature that Investing Pro is about to launch. It's called Warren AI, and it's basically Investing.com's version of ChatGPT, your very own research assistant, at the power of your fingertips. Let me show you how it works real quick. And we spoke about Microchip. So I'm going to ask Warren what his outlook for Microchip is for 2025. And, we'll see the results here in real time. So, what is the outlook for Microchip for 2025? Very cool feature. I've been playing around with this for a bunch now, and really, really helpful. Let's take a look here as Warren, compiles and goes through thousands and thousands of different financial documents. Something which would take myself about a couple hours here of work, and we see here in real time. Warren just going at it here, your very own research assistant, different, financial forecasts, the market position. And look at this, the fair value of $60, which is about 3.5% higher from where it is trading right now. The analyst consensus target, though, is 45% upside potential. Really, really cool feature here for Investing Pro subscribers. Warren AI, essentially, whether it's market position, financial health, current dividend yields, potential headwinds, what we see here for the stock, and the outlook summary pretty much does stress recovery potential from its sell-off from last year. So we saw that here in real time. We could use Warren AI to pretty much ask anything and everything, whether it's different lists or comparisons, earnings beaters or stocks with highest upside. All you have to do, just click on, the preset links there. Of course, you can also ask whatever you want. And Warren AI, be on the lookout for this one. This could be a potential game changer for all you investors out there. So pretty much we went over the top 10 2025 stock list picked by AI. We also covered the top 5 stocks picked by you, the Investing.com reader. And just as a token of appreciation to all you guys for taking the time to spend with us today, we're offering a 50% discount on Investing Pro. Take advantage of this offer. It won't last long. Tom, Lon, thank you guys for joining me. Thank you all the viewers for tuning in as well. We'll be sure to check in during the year, see how these picks are working out. And until then, may the trading gods be with you. Thank you all.